Shares of Citi jumping nearly 3% today, hitting levels not seen in more than 17 years. Our next guest says the stock will be the top big bank performer next year. For more on the 2026 outlook for financials, KBW's head of U.S. Bank Research, Chris McGratty, joins us here on set. KBW is a Stifel company. Chris, great to have you with us.
Great to see you.
So why Citi? What's the backdrop here?
Well, Citi's in the midst of a multi-year turnaround, right? They're simplifying the business, they're exiting countries, and they're taking the ROE from a bottom tier to average. And you can make a lot of money going from bottom tier to average. So the stock's been a great stock this year, but if you look at the valuation, it's just breaking through tangible book, right? The last 10, 15 years, that's been the ceiling. We think the narrative on deregulation and capital markets helps bring that ceiling higher.
In terms of the deregulation narrative, I mean, that has been some of the fuel for this bank trade for this entire year. How far are we in terms of realizing those gains?
It's less of an unknown. People expect it. If you look at expectations for capital return broadly are up about 30% this time versus a year ago. But if you think about it, there's still 100 to 200 basis points of excess capital that is yet to be put in our projections into buy-side, sell-side models. So there's still the use of capital debate, right? We're talking about buybacks, we're talking about dividends, we're talking about inorganic growth. But earnings have a real big impact on the trajectory of estimate revisions, has a big correlation over my career to stocks. So earnings revisions for the largest bank up 16% year on year. That's 2x the smaller banks. So those banks are outperforming, but for good reason.
Chris, we're making the same argument for Citi, so let's play the math game. I don't think it's deserved of a JP Morgan price to tangible book, but somewhere between where it is now and where JP Morgan is makes sense. Does 1.8, somewhere between 1.8 and 2 make sense? Because if that's the case, this stock has another 65, 70% of upside.
That's not our base case. That feels a little aggressive, but 1.2 to 1.5, you can make a lot of money, right? JP Morgan's trading at 3 times, and they're delivering 20% returns. Citi's target for next year is 10 to 11. And I think what's really going to be important as you look into May, they have a very important investor day on May 7th. I think what they're going to talk about there, and investor days have been the topic of the du jour for the banks. They're going to talk about that medium-term target, probably going 12, 13, 14, and they're going to give you the path over the next couple of years. If that happens, they're going to be compounding book value, they're going to be simplifying the business, and earnings estimates are going up. So I think there's a lot of room between my number and yours.
So, Chris, you're focused on Citi, but broaden it out for me. Every time you go into the regionals, people sometimes get burned. Where are you on them for 2026?
I think selective would be the word. They're making a lot of money. They're building really great competitive companies through acquisitions. Our experience studying this for 20 years is as that is occurring, as they're building more profitable companies, the stocks don't necessarily outperform. But would I be doing anything differently? No, I'd be deploying the capital to where the highest returns are. But we are selective. So one of the names we really like is Citizens Bank. Again, this is a pre-described, the ROE improvement story is baked, right? They're going from 10 to 15, 16%, just basically with the passage of time. Another reason we like it, you get that capital markets exposure, middle market capital markets. And then finally, we don't think they're going to be acquiring another bank. They've been very clear about there's enough organic momentum, and that can continue, so you can make a lot of money even without the help of M&A.
Chris, are there any foreign banks you like here? And again, maybe you don't cover them. I'm just curious if there's any geographies that you find pretty interesting here.
Yeah, we focus on the domestics, but if you think about the universal, the largest banks broadly, they all have an international component, right? JP Morgan, Morgan Stanley, Goldman Sachs, they have international businesses, and the capital markets tailwinds across the world are really strong. B of A is more of your domestic play. Citi is your international play. So you can kind of get the international exposure through the domestic banks.